Cipher Mining, ticker symbol CIFR, closed the regular Wednesday session at $14.62, up just 4 cents on the day, a modest gain of 0.27%. On the surface, nothing about the close stood out. It looked like a calm, almost forgettable session. But the real story today isn't the regular hours trading. It's what happened after the bell. Almost immediately, CIFR began to surge in the aftermarket, at one point jumping more than 10%. And the strange part is that there wasn't any major new headline attached to the move. No press release. No new partnership update. No analyst upgrade. Nothing on the surface that would justify such a fast, aggressive move after the close. So the big question tonight is simple. What on earth is going on with CIFR, and why does it feel like something bigger may be brewing behind the scenes? To understand the significance of this after-hours spike, we need to put it into context. This stock has been through a lot lately. Just over a week ago, it was crushed during a broad tech sell-off, dropping from the 20s down into the mid-teens. That correction was sharp and painful, but it wasn't entirely unexpected. The company had just rallied to all-time highs on the back of its massive 15-year, $5.5 billion lease agreement with Amazon Web Services. The stock simply ran too far, too fast, and when the market turned risk-off, CIFR was one of the first names to get hit. Then came the second blow, uncertainty around the company's $1.4 billion senior notes offering. That funding is crucial for the construction of its Barber Lake facility, one of the core assets needed to support its shift into AI infrastructure. But the amount of debt and the cost of that debt spooked some investors. Combine that with a shaky macro environment, ongoing inflation concerns, rising yields, and fears of trade war escalation, and you had the conditions for a heavy pullback. But here's the key point. Despite all the selling pressure last week, the long-term thesis for Cipher Mining hasn't changed. The AWS deal is still in place. The Google partnership is still in place. The FluidStack deal is still in place. The pivot toward high-performance computing for artificial intelligence is still the company's core focus, and that pivot positions Cipher in one of the most explosive growth segments of the entire tech economy. It gives the company the possibility of scaling into a major infrastructure provider in a market that desperately needs more capacity. It gives them diversified revenue. It gives them stability. And it gives them a long runway for growth. So when the stock sold off, it wasn't because the underlying story suddenly fell apart. It was because short-term sentiment shifted. And whenever sentiment drives the move, it can reverse just as quickly. Which brings us back to tonight. After-hours moves like this don't just happen for no reason. When a stock jumps more than 10% outside of regular market hours without any major public news, it usually means one of a few things. It could be that institutional players are positioning ahead of expected news. It could be that an investor presentation, a private call, or a conference appearance is creating anticipation behind the scenes. It could be accumulation ahead of a major update on construction, financing, or timelines. It could even be that traders are trying to get ahead of a bigger reveal in the coming days. Or it could be that shorts who piled into the stock after last week's drop are now covering, especially if they sense the risk of a positive announcement. When short interest rises and then a stock starts to lift in the after hours, these moves can accelerate quickly. Now let's address the insider sale that some investors noticed. In early November, one of the co-presidents and the chief operating officer sold a block of shares. These were not after-hours transactions that happened today. These were previously disclosed and part of the standard reporting cycle. Insider sales always cause people to raise an eyebrow, but this one appears to follow a trading plan rather than a sudden discretionary decision. It wasn't large enough or sudden enough to cause panic, and it certainly wasn't correlated to tonight's price action. So while it's worth noting, it isn't an explanation for the after-hours surge. If anything, the fact that the stock is ripping after hours despite the existence of reported insider selling from earlier in the month suggests traders are shrugging it off completely. So if it's not insider activity, and it's not a press release, what is this? The answer may lie in market psychology and expectations. Cipher Mining is now in a unique phase where the company has outlined massive long-term infrastructure deals that require very large capital expenditure in the short term. Investors know that the AWS revenue doesn't begin until 2026. They know that the Barber Lake and Colchis projects need heavy investment and careful management. They know that the company has shifted from the hype stage into the execution stage. But they also know that the opportunities in front of CIFR are enormous. The entire AI industry is running into a wall of infrastructure shortages. Hyperscalers can't build fast enough. GPUs are scarce. Power availability is becoming the single most important commodity in artificial intelligence. And Cipher happens to have access to one of the most scalable power regions in the United States. That structural advantage hasn't disappeared. So when the stock finally stabilizes, as it did today, and then begins to rise after hours, speculation builds quickly. One possible explanation for tonight's spike is that investors believe a major update is coming soon. This could be an additional lease agreement. It could be an update on financing. It could be a construction timeline milestone. It could be revised guidance or new strategic partnerships. Companies in Cipher's position often release follow-up details after landing a major hyperscale contract. Traders may be positioning ahead of such a possibility. Another explanation is that last week's selling was overdone relative to fundamentals, and bigger players are now scooping up shares while sentiment is still shaky. This is common when a stock goes through a large correction after a parabolic run. A third explanation is that the stock has become one of the most interesting high-beta names in the AI infrastructure space, and traders simply gravitate toward it during periods of volatility. Whatever the precise reason, the takeaway is this: the after-hours jump signals that investors expect something. And expectation alone can be powerful enough to create momentum. The market is showing signs that the recent steep sell-off may have reached an exhaustion point. If that's the case, CIFR could be entering the early stages of a recovery wave. So what's the best way to talk about this in an aftermarket video? The strongest angle is to lean into the intrigue. Tonight's move is dramatic and unexplained, which makes it naturally compelling. A great narrative is this: Cipher Mining just woke up after hours. Something is happening in the background. The market is reacting before the headlines arrive. Is this smart money positioning for a major announcement? Is the stock gearing up for a reversal? Or is this just a speculative burst? That framing creates urgency, mystery, and anticipation, all of which keep viewers watching. From there, you can walk through the recent volatility, the insider selling context, the broader macro pressures, and the long-term thesis. Then you pivot back to the key point. If there is big news coming, tonight may be the first sign. But if no news emerges, the move could still signal that investors believe the company is deeply undervalued after its correction. Either way, it positions the viewer to pay close attention over the coming days. This is exactly the kind of moment where the narrative, the price action, and the speculation all collide. And that makes it a perfect after-hours story.